Hello and welcome to Motley Fool Global Headquarters here in Alexandria, Virginia. I am Shannon Jones. I'm the Director of Programming, and I am thrilled to be here today with none other than Foolish analyst Jason Moser and Aaron Bush. Guys, so glad to be in the studio with you.
Happy to be here.
Yes, I'm thrilled because this is an exciting topic. We're going to be diving into the best ways to play Bitcoin and cryptocurrency. We've got a lot of ground to cover today, so I want to make sure we have time to get it all in. But just to give you a lay of the land, we're going to go over some basics. Then also we're going to talk about the market, some of the biggest misconceptions when it comes to cryptocurrencies, and then of course give you some ideas, some investable ideas. And then, of course, we're also going to allow you to ask us some questions live here. So be sure to type in your questions into the comments box right below. We'll get to those at the end. And finally, just want to say we've got a special report offered just for you. It's our free investing starter kit. If you've never invested in stocks before, we have you covered. Matter of fact, we're going to tell you everything you need to know to get started today and give you 5 stocks to get you off to a great start. Just go to fool.com/start to check that out. But how about we dive right in?
Let's do it.
All right, so I want to make sure, because I know we've got some YouTube viewers today who probably are pretty new to this space. They want to know the basics. So Aaron, I'll kick it off with you. When we're talking about cryptocurrencies, what exactly is a cryptocurrency?
Yeah, so I might take a couple moments to unpack this because it sounds like an easy question, but it really isn't. Crypto is a pretty complex topic. Cryptocurrencies live in the intersection of technology, economics, politics, sociology, lots of different things. But really at the core, cryptocurrencies are blockchains, which is a new type of database or ledger that was invented in 2009 and is a product of a few things. It was a result of progress in peer-to-peer networks, public key cryptography, but also a solution to an old-time computer science problem called the Byzantine generals problem. And without getting too technical about any of this, really the problem that people were trying to solve is that for digital money to be a thing, people have to be able to trust each other. But with code, how do you stop people from spending digital money twice, and how can you get a network that fully supports itself on its own without any other intermediary? And so that was figured out with Bitcoin in 2009. And what makes this innovation possible, or rather this innovation makes possible, is that it allows anonymous people from anywhere in the world to financially trust each other through technology. And as a result, we've created a new way for people to organize and for people to govern themselves digitally. But instead of governing themselves like a democracy or an autocracy, they're able to do so in a resource-based way and in a merit-based way from around the world. And so if you think about the different projects that are out there, that allows us to remake things that would otherwise require a centralized authority, but we can do it in a decentralized way. So thinking about, we're recreating store of value with Bitcoin. We're rethinking and recreating how financial contracts work with something like Ethereum, or how identity networks work with another project called Blockstack. Lots of different things. And so this is very much a technological breakthrough. It's also very much a money breakthrough. And now that people can work together in new, more decentralized way, there has to be also a decentralized way to track who owns what, who is contributing what resources to the network at any given time. And that is the blockchain, and that is what allows digital scarcity to exist. And when digital scarcity exists, the default is that the code becomes money. And Bitcoin, again, was the first breakthrough of cryptocurrency 10 years ago. But since then, that really opened the floodgates, and people were realizing that all of these other types of networks are possible. So we've seen new types of currencies come out with new unique use cases, most of which will fail. But now that the floodgates are open, the genie can't really be put back into the bottle. And it really, at the end of the day, it's such an interesting and deep field on many levels.
Yeah, so true. I mean, we definitely saw, I think, toward the latter end of 2017, early 2018, really the crypto craze kind of took off.
Yeah.
We saw some exploding highs in this space and then a huge sell-off. But then this year, we've actually started to see somewhat of a rally, albeit a little bit slow, but gradual. We started to see a rally. I mean, what's really driving this now as we're trying to make sense of this?
Do you want
I
to?
kind of wonder if what we're seeing now, because we've seen so much shakeout as far as players trying to get into the space that really probably shouldn't have been in the space. I mean, like you said, there are going to be a lot that fail. We've seen a lot that have jumped in and have failed. I mean, when I think of cryptocurrency, I don't know about you, but the first thing I think of is Bitcoin. To me, Bitcoin is probably the most stable of the entire system. But we've seen a lot of failure. We've seen a lot of waste sort of taken out of the system, and so perhaps now we can get back to really being optimistic about what does work in the system, whether it's Ethereum or whether it's Bitcoin. I don't know. Coming from someone who's generally been pretty skeptical on cryptocurrency in general, or I should say skeptical on investing in it. I'm not skeptical on the technology, why it exists, what it does, but from the investor's perspective, I've said more than once, I'm not interested in investing in it. But by that token, it doesn't mean that there won't be opportunities. I could be dead wrong. And we've seen, I think, a lot of the waste extracted from the system, and now we have really the players, I think, that make a little bit more, that have perhaps a little bit of a better future there, and maybe that's where some of the interest is ticking up from. But it's also developed, right? I mean, technology moves quickly. It's been a long time, technologically speaking, since we've seen sort of that loss of interest, and so maybe now the technology has changed. We know a little bit more, and there's more reason to be optimistic.
Yeah, the hype cycle is real for whatever technology is rolling out at any given time. And there's always something intriguing about these big nebulous tech ideas: AI, VR, 5G, crypto.
I don't know how it works, but let me tell you how big the market opportunity really is.
Exactly, but crypto was a little bit different in the sense that, like, it is money, and unlike a lot of those other trends earlier stage, it's publicly traded, and so people are able to get in on it and are able to see everybody else get rich. And money being one of the most powerful network effects in the world, especially if you can get in early on a new monetary network, it makes sense why Bitcoin and this whole ecosystem was turbocharged and just grew massively so fast to the point of just crazy mania, like a mania we haven't seen probably since something like the tech bubble of 2000 and 2001. That also means that it falls really hard too, and that's what we've seen. A lot of the projects that have raised money, a lot of them trick people. There are a lot of scams going on, regulatory guidelines, what it means in different parts of the world. Still a lot of questions. But I think for the most part, it's a good thing that a lot of that noise is over, because now it's just back to the fundamentals, back to building, and back to really innovating and thinking about what networks can be.
I wonder if part of this also has to do with the fact that, I mean, there is, we've talked about Facebook Libra and the initiative behind that, and that it's based on a stable coin. Stable coin essentially being something that it's a bit more reliable, that it's going to hold a little bit more value, supposedly at least.
Yeah.
I mean, maybe there is that feeling now with this stable coin. There's a firmer footing, a better foundation on which to build this system.
I guess. I mean, stable coins are traditionally backed by fiat currency.
Yeah.
So you're literally just buying a digital version of the dollar. And so what Facebook and Libra is trying to do, they're really just trying to build like a payment platform, a global payment system first and foremost, and having a currency in there kind of helps facilitate certain behaviors. But yeah, in general, stable coins, I think they have a place and they're valuable as long as currencies remain volatile, and they will for some time. But at the end of the day, like any currency, I think stability is an emergent property, and the more things become developed, the more use cases emerge, and the more people use it because of that, the more stability other projects and other currencies will have. And the whole idea of stable coin will be something left in the past.
Well, yeah, confidence in the system. You remember David Gardner way back when he recommended Amazon at first. I mean, this notion that someone would dare enter their credit card online and pay for something with sight unseen. I mean, nobody's going to do that. You fast forward to today, there's confidence in the system.
Yeah.
That's all we do, right? And so you can see over time, I mean, you get some confidence in the system, some success, some more use cases under your belt, then it just slowly grows.
Yeah.
So.
And Jason, you've been pretty vocal about Facebook and Libra.
Yeah, well, vote, I guess. Sure.
Maybe a little.
I think that tends to be a bit more of a Facebook thing for me than a Libra thing or a cryptocurrency thing. I tend to feel like they're grasping a little bit to try to figure out how to take that business beyond the advertising model, and I'm not sure that the problem that they say they're trying to solve with Libra in bringing more services to the unbanked and the underbanked, there are a lot of companies out there that are already doing a really good job with that, and I don't see what gives Facebook an edge other than the size of their network, and I think that's really what I've been most critical about, but I have said on more than one occasion I do not think Libra will happen. So I'll stick by that.
He's sticking with it. All right, I do want to talk about a lot that's out there that's just plain wrong about cryptocurrency. What are some of the biggest misconceptions that you've heard that you want to just kind of dispel the myth right here, right now?
What do you think?
Well, one thing that has always driven me crazy is the whole idea, just when people say, I like blockchain, not crypto.
I was going to say that, Aaron. I mean, I'm kidding.
It just doesn't make sense. Because as I was explaining earlier, the whole idea of like a ledger keeping track of who owns what when, being native to like networks on the internet, like currencies are just a byproduct of how blockchains were intended to be used. And blockchains maybe have a use case in some enterprises, like certain back office, like financial functions or supply chain functions. But at the end of the day, you have to realize that a blockchain in most use cases is actually a far less efficient technology, because it takes what used to be just one centralized database and then splits it up into lots of different pieces all over the place, which is useful when you're trying to decentralize something, when you're trying to not have that central authority be in charge. But for companies trying to find a way to use it, I think it makes sense why a lot of the traction there has not been as strong as it could have been. So that's just one thing that has driven me crazy.
Fair enough. Jason?
I think for me, it's just the investors who have wanted to jump in and kind of try to get rich quick. I mean, you see this mania, and it's very difficult to try to talk them back from it a little bit and recognize the fact that this is a new space. There's a lot we don't know. There'll be people that will get into it, and they'll talk to you like they invented the system. And obviously, no one is really as expert in this field yet, save maybe a few people. So I think there is a level of overconfidence when it comes to investing in cryptocurrencies that, for me, I'm happy to tell you what I don't know. And a lot of people have not yet quite made that leap, I think. There's a lot we don't know, and it does seem there's a lot of overconfidence in the space.
Yeah, investing in crypto is definitely a lot harder than investing in stocks for many reasons. One other thing I would add is I think it's important to, when you think about crypto, to look beyond your own world. And what I mean by that is, yes, Bitcoin broke the modern government's monopoly on money. That's a really huge deal that will have ripple effects for like the centuries to come. But a lot of people probably rightfully say like, okay, that's cool, but it's not going to replace the dollar because the dollar works just fine. And I think it's important to understand that, yes, and that's not exactly the point of what's going on. A lot of people think that just how this narrative has been taken, that the whole point of cryptocurrencies is to just create alternative currencies where like the US dollar or whatever other government currency is just useless. Some people believe that, that's fine, and maybe in certain cases it'll happen. Probably a lot of government currencies actually will get digitized and it'll become their own cryptocurrencies. But something like Bitcoin is really much more taking on gold at this point. And a lot of the technology just isn't even close to being scalable yet to where it could be used at scale, thousands of transactions at any given moment. And with the government's monopoly on money being broken, again, in the US that might not be a big deal, but there are a lot of governments out there that probably don't deserve their their monopoly on money. If you think about a lot of autocratic nations that have dictators that have just like abused the currency and have created hyperinflation. Not to say that something like Bitcoin can just suddenly come in and solve all of their problems, because it can't. But ultimately, more competition for money, more innovation around money. It sort of still is a sacred cow in a lot of people's minds, but it actually, like with any market with competition, probably leads to better outcomes over the long run.
Yeah. And speaking of government, what about taxes? I think that's a huge misconception when it comes to cryptocurrencies. Uncle Sam wants his cut.
Yeah, Uncle Sam does want his cut. And I mean, regulations around crypto is probably one of the most annoying topics to dig into. It's just
Fair
so
enough.
complicated. Every government thinks about it differently. Our own government can't really make up its mind on how things work. But yes, as it stands, many cryptocurrencies are treated as securities, and just like any other security, like stocks, if you sell with capital gains, you got to pay your capital gains taxes. So not fun for many of us, but it's the way it is.
The way of the world. All right, I want to talk about some ideas for people that are looking for different ways to play in the crypto space. Let's just start off. Let's face it, the currencies themselves are really fun to watch, but also extremely volatile. So is there one cryptocurrency you'd say is a good one to watch?
Yeah, I mean, Bitcoin, not to sound boring by saying Bitcoin, but Bitcoin is the dominant cryptocurrency. It's something like 2/3 of the entire market cap of all of cryptocurrencies is Bitcoin's market cap. So it's dominant, but it's also dominant for a reason. It's the most used. It has the greatest security. And so far, it seems to have a use case that people find interesting, like an alternative store of asset to gold. So yeah, it's one of those things that either it'll work out or it won't. I think it's probably pretty binary. If it doesn't, I mean, the price right now is $8,000 per Bitcoin. Yeah, it could fall, 80%, 90% plus from here. But also, if things do work out as planned, it's a 50 bagger. It's probably, in my mind, the most asymmetric investment out there. And there will be other successful cryptocurrencies, but if you got to start with one, start with Bitcoin. It's the most legit by far.
Gotcha. All right. But there are some safer ways to play in this space as well.
Sure.
Jason, for you, is there a stock in mind that investors can buy when they want to get some cryptocurrency exposure?
Yeah, I mean, I think there are a couple that come to mind right now. I mean, Aaron and I had spoken about this earlier today. The one that probably everybody out there is familiar with is Square, because Jack Dorsey believes in Bitcoin's future. He's facilitated that platform so that you can actually utilize Bitcoin, buy and sell Bitcoin. But one that we both like a lot, one that seems like it fits right in this wheelhouse, even though it may not necessarily seem like it initially, is DocuSign. I've talked about DocuSign here before, but I mean, DocuSign is essentially those electronic signatures, right? I mean, the electronic contracts, when you get something from your landlord or your mortgage company or the DMV, and you can sign these contracts without having to actually get a notary or whatever, just digital signatures. And I mean, when you look at what DocuSign does, I mean, we talked about these smart contracts Aaron was talking about earlier. That is very much in line with what DocuSign is essentially doing. And CEO of DocuSign has also talked about that. Dan Springer's talked about the importance of blockchain technology and how they've already incorporated it with agreements with Ethereum into what they do. So it may be one where you don't realize it directly, but there are blockchain technology implications with a company like DocuSign. And certainly as we move into this digital world, whether it's currency or agreements, DocuSign seems to be a company that's playing a big role in shaping that space.
Yeah, they excuse me, they give companies the option to secure their data on the Ethereum blockchain. And when I was looking at this a year ago, I thought it was funny because there is a crypto native competitor, or at least there used to be, called BlockUSign. and so that shows that, yeah, this actually is like a good application for this technology. But yeah, I think it'll be easier for DocuSign to take its 500,000 plus customers and then give them blockchain solutions than some blockchain native company trying to get their 500,000 customers. So
Yeah,
I agree.
probably a little
Probably
bit
in a
more
good spot.
buy-in there, yeah.
Yeah.
All right, so we've got DocuSign. That's one safer play. And for our viewers out there, if you haven't already, if you like what you see, give us a thumbs up just below this video. But Aaron, I'm going to kick it over to you. What's a good, safer way to play in the space from your perspective?
Yeah, so one company I like is CME Group, ticker CME. They are the world's largest futures and options exchange. So they're a $75 billion company. Pretty big. So this is a company where if you want to bet on anything, equities, commodities, metals, whatever, you can do it with CME. The company has also been at the forefront of crypto futures, which hold a lot of use cases for institutions looking to gain exposure to crypto or hedge their exposure to crypto. And a few companies have tried this, but CME Group, from what I can tell, is the clear winner in terms of trading volumes by a mile. With the latest market pullback, just pulling back from the highs of the mania, I think that the expectations haven't lived exactly up to what was expected, but they still have been pretty good and market leading, and I expect them to launch more crypto futures products of different currencies and such going forward. But really, crypto aside too, this is a remarkable business. They make money from transactions, and they don't really have to pay much for those transactions. And every dollar in revenue that comes in, they make over 50 cents in free cash flow. So it really is very much almost like a toll booth style business model. And then they're able to use that cash to buy other companies to strengthen their market position, buy back shares, pay a dividend. This isn't as much of a major growth stock as DocuSign. It's much more of like a stalwart play, more of a dividend play. But I like it. It's a great business.
Well, you put them together. That's a nice little risk profile.
There you go.
Yeah.
There you go. All right, I want to make sure we dive into some questions. If you haven't, you can submit a question right in the comments box just below. But we've gotten several already. Thank you so much for engaging. I'm going to go with Chuck. Chuck asks, are cryptocurrencies something that are better to trade short term? It seems like there are profits to be had, but then it all vanishes days, weeks, even months after. So true, Chuck.
I don't think so. It's interesting. I actually would have maybe said yes, and this is very counter to like what the fool says, but in the earliest days of crypto, even like a couple of years ago, when markets across the world were popping up, there were major price discrepancies between the different exchanges that were out there. So there were like crypto hedge funds making good money just looking for those discrepancies. But naturally, as the market matures, those discrepancies go away. That's where we are now, and I cannot think of any reasonable way where people can have a good long-term sustainable advantage through trading. It still is very much, you got to think about what is the big idea here, what is the upside, what is the risk, and hodl for the long run, right?
That's right. All right, several people are asking this question. We talked about scams a little bit. How can you spot a scam and tell it apart from a legitimate idea?
I mean, I personally would just be looking for, number one, the actual amount of liquidity or money in whatever currency is being lobbed up there. It does seem like you can look at some of the names and think, ooh, well, that just doesn't really make any sense. I mean, we were talking earlier about Potcoin, right? And I mean, that was one of those things that seemed like, you know what, maybe I ought to give that a little bit more due diligence before considering it. So sometimes it is as it seems. It's such a new space, it's hard to really have track records to go by. But that, I think, is what makes Bitcoin look a lot nicer today, is we've got a real track record to go with here and a lot of buy-in from a lot of important parties around the globe. So I hope that at least helps. Yeah. But I don't know, what do you think?
Yeah, I think that's good. I think when in doubt, just ask this one question: does it work? If it doesn't work, it could be legit and they're still working on it. But there's more risk anyways. But if it does work, probably not a scam.
All right, fair enough there. All right, another question. Let's see. All right, this is a good one. Should we fear government central bank intervention or regulation? This is coming from Sandeep. Thank you, Sandeep. He says it seems like something they could want to have a hand on at some point in time.
I'd imagine they will want to have a hand on it at some point in time. Yes. I mean, I think from that perspective, if you're looking at this as an investment because it will supersede any government intervention, I would probably push back on that.
Yeah, I think this is the #1 largest hurdle for all of crypto for the next many years. If you look at our own U.S. government, I think we can start to see that although there are people that are asking hard questions and are saying, hey, this will undermine the US dollar, more or less people are accepting that Bitcoin is here, it's here to stay. Nothing you can really do about it because it's decentralized around the globe. You can't really shut it down. But other countries like China, even India's had some more pressing regulatory scrutiny. I think it is more up in the air. Even if they can't shut down Bitcoin, they can stop people like merchants from using it. They can cut off a lot of use cases. So I think it is a good question. I think it's also something that not every government has to agree on for it to be successful. It's a big world. Even if it's just viable in the U.S. and across, several other countries, but not available in something like China, could still be a very interesting technology and investment idea.
It's not about replacing what we're doing today. It's more about just trying to make it better, I think.
Right.
I mean, there are a lot of examples where technology isn't about replacing something as much as it's about trying to just make a given system better. And it feels like that's what this is. It's just kind of working its way to that point.
I think if you play things out over the long run, it definitely is a threat to nation states, but not yet.
Not yet. All right,
yet.
so a lot to watch there. Another question, can you give me a few examples of how blockchain will be used by companies?
DocuSign was one example, just using e-signatures. That's something that is good. Like if you want to make sure that something is kept sound, untouched, undisturbed, put it on the Ethereum blockchain, good to go. I think that can apply to other pieces of data beyond just signatures. Companies wanting to store medical records and other sensitive pieces of data that they don't want tampered with. Putting it on a blockchain is almost like another security measure.
Real
for
estate
that.
transactions, probably. I mean, think about the inefficiencies in that system. You've ever had to close on a house sale or purchase. I mean, there's a lot involved there, and that always struck me as a great opportunity to try to wring out some efficiencies.
Mm-hmm.
Yeah, and even I think some universities are testing it out just with transcripts, being able to verify that this is a legit transcript when you're sending it out to employers or whoever. So
yeah,
there are a
supply
lot.
chain. Yeah, I don't know. There are several use cases.
Yeah.
It's hard to get them to work efficiently, but yeah, where it does work, it can save some money.
All right, next question. Does it make sense to use any cryptocurrencies as currencies? When does that happen, or when should it happen?
I don't think we're there yet. I mean, I think people have tried. It's just not efficient. I think if you look at something like Bitcoin, there is development on what people call level 2. The Lightning Network is the number one level 2 player at this point, and that essentially means that you can open up these payment channels, these new payment rails, and then transact with far less expense, far more efficiently. So people are working on solutions to make it possible. And I expect this will get us closer to that reality, but it's still a ways out.
All right. We've got a lot of chatter about Ripple right now in the chat box. Do you guys have a specific outlook on Ripple right now? And that's XRP for our audience out there.
I mean, kind of. I think the underlying technology of Ripple is legit, helping banks better move money around the world between other banks. I think there are efficiencies to unlock. I think the biggest question for Ripple is whether or not the token XRP is really needed in a lot of those transactions. I think that is something that hasn't been proven yet. And there's still, even though the price is down quite a bit, there still is a lot of speculation built into the price. So yeah, I have very big questions about XRP. The company itself, though, is more legit.
All right, one last question. RK asked, there are a lot of headlines around cryptos being used for illicit activities. How does that factor into the thesis?
Well, I think a lot of that, some of it is true. A lot of it isn't. The number one used currency for illicit activity is US dollars. And in fact, something like Bitcoin is the most transparent currency out there because it literally is a ledger of who owned what when, who transacted when. There are some more privacy-centric coins that attempt to block out who was trading, how much was trading, when there were trades. And some of those have been getting banned more by governments, so that is something to be thinking about. But the volumes on that are pretty low. It still is US dollars and fiat currency that are the main problem there.
Gotcha. All right, well, that will do it for us here at Motley Fool Global Headquarters. I want to thank you, our YouTube audience, for tuning in. If you haven't already, be sure to get that free investing starter kit. Just go to fool.com youtube.com/start to get that. Also, be sure to subscribe to this YouTube channel. We have a ton of content really designed to make you smarter, richer, and happier. And also give us a thumbs up if you like what you're seeing here. As for Aaron Bush, Jason Moser, and myself, and everybody here at The Motley Fool, thanks so much for tuning in, and Fool on.